Welcome to Mastering Mortgages, presented by Revolution Mortgage, the podcast that demystifies the world of mortgages, real estate, and homeownership. Our goal is to empower and inspire homebuyers, real estate professionals, and mortgage industry leaders. My name is Danielle, and I want to invite you to join me as I sit down with today's guest to talk about practical tips and valuable insights into the mortgage industry. Hey everyone, and welcome back to the Mastering Mortgages podcast. Today we have the pleasure of hosting Brett Thomas and Sam Martin, who are both branch production managers at Revolution Mortgage. In this episode, we dive into the realm of innovative mortgage solutions, exploring new strategies and ideas that are shaping the future of home financing. Brett and Sam bring their extensive expertise and insights to the table, making this a must-listen for anyone interested in the evolving world of real estate. Well, we are super excited today to have Brett and Sam on our episode and just kind of talking about innovative mortgage solutions. So just want to thank you guys for being here. And I think to start off, I want to, have you two talk a little bit about each other. So first, let's hear if you could only choose one word to describe each other, what would it be and why? Hopefully y'all have thought about this a little bit.
Well, this is the easy one for me.
That's an easy one for me too.
I would say collaborator for Brett. He does an awesome job within his community, whether it's family, whether it's college buddies, whether it's neighbors, whether it's siblings, whether it's us here in the office. He just does a good job of just always connecting people. And specifically, if a topic comes up, it's like, I got a guy for that. Or I know someone who can help out with that. So he does a really good job of just really collaborating with people and getting people connected to one another.
For me, I would say when I think about Sam, he's driven. He's a driven individual, and that comes really as a partnership, as a strong attribute, because you can't be all things at all points in time, but I can always count on him to drive in the team, whether it's a sales meeting, working with the processing team, driving sales results, working with the loan officers, and he's always got a really good message around that when talking to people. So, when you think about this business and growing, you need to have that coach and that individual that's going to be steady and driven. That's Sam.
All right. Collaborative and driven. I like that. Definitely good ingredients to make an awesome team. So I think we also will probably want to dive into a little bit of your background and just, how did you two meet and how did you come together and create this branch and turn it into what it's grown into? So just tell us a little bit, about where you started, how you guys met, and where you're at now.
It's a good story. I'll let Sam tell the first half of the story because there's a little twist at the end that I always like to tell.
Yeah, and I'm glad you asked this question because I think what really sets us apart, probably for a lot of partnerships, Brett and I, we go back, probably almost 20 years. I know I'm aging ourselves, and we started together and I was on the non-conforming side, so I did subprime lending, and Brett was on the conforming side. And even though that at that point in time we didn't work directly together, we still were in mortgages. And we called on him when all the decline files, loans that they couldn't get done, we would actually take those and get them over the finish line. And then lo and behold, as everyone knows, my world crashed in 2007 and 2008, and that's when decided to pull out of the subprime business. And a lot of people, there was about 1,000 loan officers that were in subprime at the time. They laid off 980 in one day and kept 20 of us. And fortunately, those 20 happened to be here in Columbus, Ohio. One of them actually was Tim Johnson, one of the founders and owners of Revolution Mortgage, which is an even funnier story. Anyway, we were thankful to have our jobs, and there were two lanes that you can go into. There was the consumer direct, which is more of a call center for loan officers, And then there was the retail channel where they actually had loan officers sitting inside of bank branches. And Brett happened to be on the retail side. He was one of the lending managers.
And then my boss called me one day and said, I hired you a new loan officer. His name, you know him, his name is Sam Martin. And I was like, oh, Sam. He's like, he's in Westerville today. Why don't you go up and say hi to him and take him out to lunch and welcome him to the retail team? And as I was walking out of our manager's office at that point in time, he said, oh, yeah, and by the way, he wants your job. So since then, Sam and I have been thick as thieves. He did get promoted about 6 months later. They divided the market. I had West Columbus, Sam had East Columbus, and it's been fun competing ever since then because we drove pretty hard sales teams, and he taught me a lot about the call center and consumer direct because I never had that training. I taught him a lot about the purchase business and relationship-driven business, and so since then it's been hip and hip since that interaction.
Well, then to just take it a little bit further, though, I had since left, got into other banking, started doing some different things, and wouldn't you know how the universe works, a huge opportunity came along. One of our bosses took a bigger role with a competitor, a regional size bank, and reached out and asked if I had any interest in an opportunity. And, I took advantage of that opportunity. And when I was deciding if I wanted to take it, I actually picked up the phone and called Brett.
And I was being interviewed for the same opportunity.
And we didn't know that at all, which was funny.
Yeah.
And I was, picking his brain at the same time. I was like, it would be a great opportunity to work back with him. And lo and behold, just through that conversation, we uncovered, wow, we're being recruited. We thought maybe for the same job, right?
We both got the job.
And we both got the job. And so we ran different regions for a regional sized bank. And we did that for, I don't know, about
3 years.
Yeah. And I think, at the end of that third year, Brett, you want to share what was happening?
Well, just like all big banks do, they mess with comp plans, they mess with people's lives, and it's their bank. They'll do what they want to do and do it how they want to do it. And so we were given a package to leave the company. Thanks for all your hard work and building us a mortgage platform. Now it's time to go. Prior to that, we knew something was up, and we had been talking to the owners at Revolution. So we had a backup plan, which wasn't even a backup plan. We were all in when we heard what Tim and Tony were building at Revolution. So it was just kind of the next step, and no regrets with any of those steps. So any of those banks or institutions we learned along the way, we learned a ton. We wouldn't be where we are today without that. So it's been a great learning process, and just very happy that we landed where we did at Revolution.
Yeah. One of the things that it should be mentioned again, one of the reasons why we joined Revolution was because of the owners, Tim and Tony, and we knew Joe, we knew Dave, we knew them to be credible individuals. I want you all to know, though, when we started, Revolution was nowhere near the size and scope that it is today. I think we were in
branch 2.
Yeah, branch 2, but they were
Dave and Joe were still doing loan applications.
I think we're employee 71 or 72 or something like that.
Yeah, probably.
And so I would say the leap of faith wasn't scary because the people that were behind this company.
Yeah, and the success they had happened in the past. So.
Exactly. So it probably would have seemed scary for the average individual coming into a new company and there only being one branch. Can you imagine just one branch? But
we had grown two other platforms in the past. So when Tony sat us down and said, hey guys, it could be a bumpy ride for the next 6 months, we're like, we've had 2 bumpy rides at the last 2 institutions. Yeah. We know what growth takes. We've been a part of it. We've been leaders a part of it. And we feel like we were a part of that growth and helping mold what we have today.
And they took advantage on us because we had never ran a P&L before, even though we had large organizations in the banking world. We still did not have that P&L experience. We didn't have a team. There was no sales apparatus. We didn't have any leads. So at the same time, they also took a leap of faith with us, and we all never looked back.
Yeah. And so it sounds like your experience that y'all did have kind of prepared you and led you to when this opportunity came up, that y'all were ready for it. And, you started off with basically startup and have grown so much from there, which I think really just also kind of applies to something else that we wanted to talk about today, which is that you guys have talked a lot about, or we've seen a lot of growth from your branch, and you now have satellite locations. And so just want to hear a little bit more about some of the unexpected benefits and challenges that have emerged from operating satellite locations, and maybe what's come with that growth that you guys have experienced.
Yeah, well, it's been, I would say the number one thing that we've enjoyed with that is meeting other like-minded loan officers, managers, help introducing them to this model, because this model is pretty unique, the P&L model. But then one of the big advantages is meeting their realtors and their realtor partners and seeing how they interact in their markets. Not every market's the same. They've got different regulations, different rules, how they do open houses, how they conduct business. And so it's not all the same. And so it's given Sam and I exposure to other markets and what's important to the realtors, to the financial planners, to the builders in those markets. So it's really allowed us to open our eyes, be open-minded to how we do business. But this is a people business, and Sam and I love to meet people. And so we've been intertwined with a lot of great relationships that other people have built that we've been introduced to, and some of those people are still our friends to this day. So that's probably the greatest thing, is just meeting new people that are in this business and helping them along through the journey.
And I would say too, the way that these partnerships also had formed was, some of these were from past relationships who watched Brett and I, change really the way we do business, from leaving traditional corporate America and kind of taking the reins on our own through the entrepreneurship of a P&L platform. However, they started out just like Brett and I, where there wasn't a sales apparatus. They never ran a P&L. And so what better atmosphere to be mentors to them and watch them grow businesses successfully. And so when I look at Sherry Miller down in Mason or Monica Price down in Tampa, being that sound of reasoning during the lows as well as the highs, it's been an awesome and a tremendous treat for us.
Yeah, and it creates a great culture for the team as well, because these are individuals doing the same job function in different markets. And sometimes we're ahead of the curve, sometimes we're behind the curve. And the other great thing, and probably another amazing advantage, is people are having success in different markets doing different sales functions and activities. And so it's a light bulb for everybody in the rest of the team. Well, if they can do it, why aren't we doing this? So we collaborate really well. We've got a weekly sales call with everybody, and we collaborate. And I wouldn't even call it a sales call. It's a gathering of the minds and helping everybody out with success. So that's probably a huge advantage that we have against other branches, other models that are out there because of that collaboration.
Yeah, there's that word again, collaboration, what we started off with. Well, yeah, that's great to hear. And I think it is a really great point that you bring up, just about how you get exposure to other markets and how it can vary from state to state even, and just what the opportunities look like there. So, but yeah, I think also it's just a great opportunity for, maybe a way for you guys to learn from each other, whether it's, hiring somebody or bringing on a satellite location in a different city, different state, and just learning from them, but then also what you guys can bring to the table, and they can learn from you and how to really just take off with the industry. But, with all of this being said, one particular loan we wanted to talk about today is Revolution Mortgage's construction loan. So Brett, maybe you could talk just a little bit about I know that that is becoming a more popular loan, and it's something that Revolution Mortgage offers, but what kind of sets it apart in today's market as of, about to enter December 2023?
First of all, it's a product that's well needed in this marketplace. I think 50% of the new sales is going to be existing. The other 50% is going to be builder business. And so if you're not working with builders, you're in a fail market, right? And so what's been great about Revolution is that they've been able to pivot and forecast where we need to be. We've had the product, I think, up and running now for about 7 or 8 months. It's a construction to perm, one closed loan. So the difference between that and the traditional end loan is if the house is built, you would do the end loan. This model with the construction to perm, it gives the ability to go build on your own land. And so you would buy the lot, you would pick a builder, and then we would finance that build transaction through the construction to perm process and then wrap that into a loan at the end. So it is a little bit unique. However, out in rural areas, it's very common. The other thing is that probably the biggest benefit right now that some of you in the audience might not know is that a lot of the bigger banks are starting to squeeze down on their lending capacity. And so when they squeeze down on lending capacity and you're a builder, they start cutting down on your line of credit and your ability to go out and build homes to deliver. So that's a double whammy. We've got lack of housing right now, and you've got the builders that want to go build houses, but they can't because the banks have cut their lines of credit down. This is the only solution, and an amazing solution, to help those builders still go out and build. Because when we're the bank at Revolution and we have this product, we basically finance that build through the months and that it takes to build through our construction and perm process. And so it's a really big conduit. It's going to be a big part of our business for the next 2 to 3 years. We don't think the banks are going to let up on that credit squeeze. And so we look forward to meeting a lot of developers and builders out there. You can do this on mobile homes, modular homes, and your traditional stick-built homes as well. And so it's a vast product that really can serve the entire mortgage community. We could do it with FHA loans, we could do it with VA loans, and your standard conventional loans as well as jumbo loans. So that's going to be an amazing thing as things progress, that going out there and helping and shoring up builder relationships, because that's a lifeline of business down the road too, that continues to give. When you work with a builder, typically there's a realtor involved. That's a way to stay in front of that realtor and introduce yourself, and I can work with that realtor now moving forward too. So it serves several different means. And so I would encourage anybody listening to this podcast, if you're interested in the product, reach out to a loan officer that does it, because it's a really, really amazing program.
Talk about saying too, just to add, you have 2 customers now. The end customer who's actually going to benefit from the brand new home, and then that builder that you talked about. It's given us an opportunity to talk to actual builders and developers, a spot that I haven't really been into, but you're talking about a lifelong customer.
Yep.
Then you can marry that realtor to that. So it kills 2 birds with 1 stone.
That's it.
Yeah, no, you definitely covered a lot of what exactly the construction loan is, and just how there's so many opportunities and ways to use it, and it can be beneficial. But also, I think, like kind of what you're saying, it's just a one-step process instead of, multiple steps. It's all inclusive. It includes everything when you're going into that construction process. So definitely an option that I think, if we have any listeners that are wanting to build a home, this could be a good time. This could be the good option for you to use. Obviously, speak with your lender first about the options, but just as we're talking about today's market, I know that the inventory of homes is kind of low, so this could be the way to go. But I appreciate you giving us some more insight on, where and how to start that and just what it kind of covers. With that, I just wanted to also talk about the fluctuating economy and how that's impacted the way you approach mortgage solutions. So Sam, maybe you want to start with this one. Just kind of talk about that.
Well, one of the things that when you think about the most shifting, changing industry, you have to adapt and you have to be fluid with the industry. And one of the benefits of Revolution is the amount of products that are available to us. Now, as sales professionals, leaders, coaches, branch managers, we have to help our loan officers find ways of still being nimble and yet still earning income in such a high rate environment. And a couple of those tools that come to mind that we just recently got into is the reverse mortgage product, or the HECM, if you will. And if you think about it, the baby boomers, they own the majority of the equity in the country right now, right? And what's frustrating, a lot of their income that they used to make prior to retiring would not qualify them for a forward mortgage, but yet and still they're sitting on a lot of equity. And with the changes in our economy and the cost of living going up, this product has allowed them to free up some of those finances and give them what I like to call a lifestyle loan, right? And no one that's in that retirement age should be frustrated with thinking about financial bills or heartaches or things of that nature. And a lot of the baby boomers like to pass along the fruits of their labor to their children. And that's one of the neat things about the HECM product that it does. It allows them to pass along wealth through real estate, which has been an awesome product. Another sweet spot that we've gotten into is doing construction on manufactured homes. There's such a small segment of the financial community that's even doing this. Revolution has found a way of entering that market, which now allows our loan officers, if you will, to be visible, to take advantage of an opportunity that the majority of the financial world is not involved with right now. And then these products will lead you to other doors where you're working with financial advisors who also have clientele, builders that are working with manufactured homes. You got inventory. So what we're finding out is a lot of these pockets of industries, loan officers aren't traditionally calling on them because they don't have the tools to help their consumer base. So I think the majority of our calls have been, how do we still stay relevant? Are we utilizing these tools? Our partnerships with some of our brokers that are in the non-QM world, in the Columbus, Ohio market, I can't express how investor heavy we are. A ton of folks from all over are trying to buy homes in our market, and that's just because Ohio is going to be the Silicon Valley of the West, with Intel being here and Google being here and Microsoft. So we found a way of partnering with the broker, the investors out there who want to move inventory but don't have the paperwork to do that. So we have the ability to work with those folks as well.
Yeah, to answer your question, the economy has been rough, right, for the past 24 months. And so you really have to wake up every day and figure out where your business is coming from and project, right? And people say use the word pivot a lot. I know Sam used the word adapt, but that's really the market that we've been in, is that you've got first-time home buyers buying homes, you've got the move-up buyers not buying homes, and you've got the uber wealthy buying homes with cash. And so it was a cash-heavy market. So if you're not working with enough agents to do first-time home buyers, you're probably dying. And so this is where you look at that pie graph and say, where's your business coming from? Sam talked about financial planners. The reverse mortgage product, the HECM product, you work with them. We've got tons of investors coming into town. We've got a DSCR loan that allows them to do rent roll from an income calculation. And the investors have not stopped. The investors are at the bottom of the underbelly of the real estate market, and they have absolutely not stopped. We're working with more investors now than we probably ever have. And so there's a slice of the pie, right? We talked about the construction of permanent, working with builders. And so if you're a loan officer, you better be building a plan for 2024 today, because if you get to January, start building your plan, you're already behind. And so you start looking about where where'd your business come from this year? How can you get more of that business? And then where are some other products and areas that you can grow your business? And if you're with an institution that doesn't have other spheres, you're probably going to be in trouble, right? You got to have other product sets. And so that's that pivot to maybe figuring out reverse or construction or investor business with DSCR. Everybody else does the vanilla Fannie, Freddie, conventional purchase loans, right? How else are you going to fill your bucket for the next 2 years if that segment's not there? And so that's a really important thing. You think about what Revolution offers, and going back to them forecasting where we need to be, they've added these programs on, and they're not going to stop. We're going to continue to add to stay in front of the marketplace as it changes.
Yeah, I'm glad that you guys touched on just the creative solutions that you've had to come up with, and just being able to pivot and not only finding those solutions, but then also just tailoring it back towards the consumer, back to the buyers, and just making sure that they're all set with what they need and having the right loan program. So I'm glad that you guys talked about that a little bit, but also just, the investors, like you were saying, Brett, that's also just such a great point that you made about, this is the time for them to start building those portfolios. And whether it's in Columbus or one of the other markets that you have, it's just a great time to kind of connect and also help them with that. But another thing that we just kind of wanted to cover, and this will probably be the last point, is just what piece of advice that you've received that you find yourself sharing with others. So either one, I'll let you start, but it could be something, that maybe you had a piece of advice you had a long time ago and you just hold it with you to this day, or maybe something that recently came up.
This is, sorry, Brett.
That's right.
This is a marathon. It's not a sprint, right? And for anyone that's only in this business for the highs, you're gonna die. You're gonna die fast, right? And if you had that mindset and you understand that the financial industry, it's never like this. It's always like this. But you got to find a way of staying consistent in spite of the highs and lows. And you almost brace for impact, and you don't allow it to deter you, right? And so that's what comes to mind. And it comes to mind when I started out in the subprime world and it crashed. And a lot of people left being loan officers because it shook everyone up, right? And I'll never forget, just my mentor at the time was saying, Sam, it's not a sprint, it's a marathon. And so that is what we pass along. Even when loan officers have deals that die, or realtors that pull out, or a customer can't move forward, you can't get caught up in the day-to-day strifes and struggles and adversity. The only thing you can do is pick up the phone and make that other call, and pivot, adapt, find other ways of still being relevant, keep a positive mindset, because if you can make it through this year, man, you can make it through anything.
Yep.
Right?
I would say, I think I heard the term one time, if you're not growing, you're dying, right? And so you think about, we're in sales, whether you sell computers, whether you sell cars, whether you sell mortgages, or you sell homes, right? You look at the end of the week, how many prospecting calls did you make? Did you meet a new center of influence that can provide you future business? Like every day there should be some type of time given to growing your business. And so in this environment, if you're really truly not growing, like you think about first-time homebuyers, I'm an older loan officer, but I love working with first-time homebuyers, right? I enjoy working with the younger realtors and training them just as much as the agents that are my age I've been working with for 20 years. But you've got to be able to add those new relationships on in some capacity, whether that's making phone calls, going to a networking event, getting out of your seat and doing something different that might make you uncomfortable. Otherwise, you're going to get run over and get left behind. So that would be my big piece, is that, grow or get left behind.
Yeah, well, I think that what you both are saying is definitely great advice, and sounds like it's a little bit more tailored towards people that are in the mortgage or real estate industry. and pieces that they can take away. But on the flip side of that, I want to hear just a little bit of advice maybe that you'd have for if we have a listener that's maybe a borrower or on the fence of wanting to buy a house, and just what advice that you would give them as well.
I'll take this one first, Sam, since you got the last couple first.
Absolutely.
First of all, Sam and I are both super passionate about home ownership, right? That's why we're in this business. And so there's been a lot of people sitting on the sidelines as houses continue to appreciate. And we've got calculators we could show you about the cost of waiting. I would say this, if you have any questions, get with a family member, get them referred over to a mortgage specialist that can walk you through the process and educate you in the process. The one thing I'll say about the interest rates, no matter where they are, if you're renting, you're paying 100% interest. You are burning cash every month, every year that could go towards a down payment. Even if you don't have down payment money, there are down payment assistance programs that you can still buy a house, right? You don't need 20% down. You can go with no money down or 3% down or 5% down. My biggest suggestion is get in the game, because it's the greatest way to grow wealth today is to invest in a home and watch your wealth grow. It's a built-in 401k plan. You're making principal and interest payments, your house is appreciating, and as that is appreciating, you're paying down the loan balance. And you'll look back in time and say, I wish I would have done this sooner, because it's the greatest way to help yourself grow wealth.
The only thing I would add to that, because you summed it up best, is you hear this term, date the rate but marry the house. And I think a lot of people get caught up in interest rates, right? Like what they can afford, right? And if you're renting, you're paying 100% interest rate right now, right? And so to me, 8 or 9% is a lot cheaper than 100%, right? But that asset is going to, over a period of time, it's going to pay you back. There's a slide that Brett has at one of his presentations. If you were to pay $20,000 now to earn $70,000 in a year or so from now, would you do that? And I think that's an easy answer, right? It's our job to help that person on the other side that's looking to invest in an asset of what kind of return that you're going to get.
Yeah.
So those are the things that I would just ask.
I would also add one thing is that we're starting to see interest rates slide, okay? As we slide down the hill, more and more buyers are going to come out. And I can tell you, when there's not enough houses and there's tons of buyers, it can be super frustrating. So now's the time to buy. You can always refinance, like Sam said, marry the house, date the rate. But the soonest, the more rates slide, the more borrowers are going to come out of the woodwork to buy homes. And there's going to be multiple offer situations that it can be super frustrating. And so it's imperative that if you're ready, get out now. I don't know when this podcast is going to be, but I've always said the best time to buy is Q4 and Q1. As you get into March, April, May, it's going to be a feeding frenzy out there on all the houses. Rates are going to be coming down. Payments are going to be great. And, get with a mortgage advisor, get with your parents, friends, and family. Ask them about the process.
Yeah, I think that is a great perspective that you guys have. And I was just going to touch on what Sam said about renters looking at what their monthly payment is they are already paying 100% interest rate. They're never going to see that money again. But if you're putting that money into a house, then you're just going to see it grow. But also just with what you were saying, Brett, about now, or really just, you always encourage people Q1, Q4 is a great time to buy a house. But I kind of have a question for you guys just along the lines of that. I've heard, that it's encouraged to buy when no one's buying. So that kind of goes along with what you're saying with Q1, Q4. We know summer months are really, really busy with people moving. But is that something that you guys would agree with?
Get that from Warren Buffett. You buy when no one's buying.
Buy when everybody's crying.
Right.
That's exactly right.
Yeah.
And it is still a pretty competitive market out there. I don't have a good enough analogy of what it looks like in March, April, May, and the frenzy that goes on. And we would be expecting, based on what the Fed's done with interest rates, the economy and where it sits is that the rates are going to start coming down, and it's going to be a crazy spring buying and summer season. So, which is great. It's great for our realtor partners. It's great for those who get out and buy a home. Appreciation rates at every market's a little bit different, but average appreciation is about 5 to 6% nationwide. In Columbus, it's in that 8 to 9% range, and so that's a pretty good investment on your money when you think about it. Pretty secure compared to the stock market, and so it's just something to think about from a financial planning tool standpoint too.
So get in now.
Yeah. I mean, we're like, bring it, but yeah, I mean, it is a little bit, we don't have a crystal ball to tell us what's going to happen in the future. So, if you know what your budget is and where you're looking to buy a home, then just talk to your lender and they can help you find the right option. But I do just want to say thank you so much, Brett and Sam, again, for joining us today, giving us insight on, just how you guys came together and what you're doing now with growing out your branch and your satellite locations, and then just talking a little bit about the loan options that are available out there. But most importantly, I hope that some of our listeners, probably have a variety of people who work at Revolution or people who worked a lender at a different company, or just maybe buyers that are on the fence or realtors that are out there. So hopefully they can take a piece of what you guys said and apply it to what they're doing. But just thanks again for coming on and sharing your experiences with that.
Thanks for having us, Danielle.
Appreciate it. Been fun.
Let's make moves.
To stay up to date with our podcast, please subscribe, follow us on social media, and visit our website, revolutionmortgage.com, to learn more about how we are revolutionizing the mortgage industry. We hope you enjoyed today's episode, and we'll see you next time.